Moving to France with US real estate, here is what nobody tells you. Imagine this. John is a US citizen. He owns 3 rental properties in Texas, total net worth $2 million. He decides to move to France and become a French tax resident. And a few days later, somebody tells him, congratulations, France is now going to tax all your US real estate under the French wealth tax. John panics, but that is only part of the story. Let's see what the France-US tax treaty actually says. Step 1. General case. Once you become a French tax resident, France generally taxes you on your worldwide income. But many people don't realize that France may also tax your worldwide wealth through the French real estate wealth tax. So, if you own real estate in France or in the United States, the first question is simple. Is your US real estate included in your French real estate wealth tax? To answer that question, we need to read the tax treaty. Step 2, Article 23. Article 23 deals with wealth. Paragraph 1a confirms that real estate is part of the taxable wealth. At this point, you might think that your US properties are immediately subject to the French real estate wealth tax. But keep reading, because paragraph 6 changes everything. It provides a special rule for US citizens that become French tax resident. During the first 5 calendar years following your arrival in France, your real estate located outside of France is excluded from the French real estate tax wealth. That means John's 3 rental properties in Texas are ignored for French real estate wealth tax purposes during those first 5 years. Step 3. What happens after 5 years? This is where many expats make mistakes. From year 6 onwards, this protection disappears. France will look at John's worldwide real estate. Just so that you know, French real estate wealth tax starts when the value of your properties exceeds 1,300,000 euros. Suppose John owns a US real estate of 1,600,000 euros and his main property in France that is valuated at 300,000 euros. So his worldwide real estate is now 1,900,000 euros. It's above the threshold that triggers this tax above 1,300,000 euros, remember? So John is potentially subject to the French real estate wealth tax right now. Based on this total value and with the French tax bracket you can find on the internet for 2026, on the French real estate wealth tax, he will pay approximately around 5,000 euros per year just because he owns those properties. Sure, depending on liabilities, expenses and so on, but approximately 5,000 euros per year. Now, step 4, Article 24 of the treaty. Now, another question arises. What if John has already paid a comparable wealth tax in the United States? Article 24 of the treaty provides the answer. France still calculates the French real estate wealth tax on the worldwide real estate. However, France grants you a tax credit equal to the amount of the comparable wealth tax already paid in the United States without exceeding the French real estate wealth tax due. Obviously, otherwise, France would lose money. But here is the practical issue. Today, the United States does not withhold a federal annual wealth tax comparable to the French one. If there is no comparable US wealth tax, there is no tax credit to claim. As a result, the French real estate wealth tax may become fully payable on your worldwide real estate from year 6 onwards. This is our interpretation of the treaty based on its wording. And as always, the treaty prevails over the domestic law whenever it applies.